And joining us now in the nation's capital via Skype, Andrew Sharp. He's Executive Director of the Center for the Study of Living Standards. And with us back here in studio, Catherine Swift, President and CEO of the CFIB, the Canadian Federation of Independent Business. Craig Alexander, Chief Economist with the TD Bank Financial Group. Jim Stanford, Economist with the Canadian Auto Workers. And Charlotte Yates, Dean of the Faculty of Social Sciences at McMaster University. It's good to have everybody here in the studio. And Andrew, nice to have you on the line via Skype from Ottawa. I want to start by just putting some facts on the table here, and then we'll come back and talk after that. Michael, if you would, here we go. Canada's job market continued to weaken in January as employment rose by a meager 2,300 jobs, much less than the growth in the number of workers in the labor force. As a result, the national unemployment rate rose from 7.5 to 7.6. The unemployment rate has been steadily climbing from 7.1 last September, since which time we have lost 67,000 full-time jobs. The youth unemployment rate jumped from 14.1% to 14.5% in January, and there were significant increases in the unemployment rate in Atlantic Canada and in Ontario, where the unemployment rate rose from 7.7 to 8.1. Between 2002 and 2011, the Canadian dollar increased 59% in value, while manufacturing employment fell by 300,500 jobs. That's almost 30%. Factory employment has faded to just 11.8% of total employment, half the 1976 levels. And as you can imagine, those numbers were of some considerable interest to the opposition at Queen's Park. Here's a snippet from one of the members of the opposition at the legislature. Roll tape.
Look, productivity is important. We recognize that. But with 600,000 Ontarians out of work, our focus should be on creating good jobs. Without good-paying jobs, there is no prosperity. The kinds of jobs that once made this a middle-class province, the kinds of jobs that have been disappearing under the McGuinty government at an alarming rate. Will this government make job creation a priority, or is it throwing in the towel on the middle class in this province?
Let's start with what may seem like a very obvious question, but you just never know. Should the Government of Ontario explicitly state job creation is our #1 priority? What do you think?
Absolutely, but I think it has to be the Ontario government as well as the federal government. The two have to work in concert, and I think they have to name it a #1 priority, but it also is not enough just to say, let's create jobs. They must create good jobs, because it's only good jobs that provide adequate wages, decent benefits. And good jobs also then should be the future for the youth, because young people at the moment are caught in precarious employment. Wages are declining. Real wages are declining, and as a result, we also need to pay particular attention to the jobs for young people. And many of those young people are highly educated, and yet we don't have the economic growth that is absorbing those young educated people into the good jobs they deserve.
Do you see that at your university?
Absolutely.
They're champing at the bit to go.
Absolutely, and they're highly skilled. There's
nothing to go to.
Nothing to go to.
Catherine, should the Government of Ontario say job creation is our #1 priority?
Well, I'd like to know what they would mean by that if and when they say it.
Precisely.
Because obviously the notion that government, job creation is a very important part of the economy, no question about it. But I think you get into sort of a chicken egg. And when I think of governments worrying about job creation, actually the Ontario government's done quite a good job of it in the last little while, because they've doubled the expenditures of government. I'm being sarcastic, of course, as you might have deduced, while the economy has roughly grown by about half of that. So in other words, government has grown by roughly double what the economy did. And obviously that's unsustainable. Government doesn't create, it takes the wealth created by the private sector and dispenses it accordingly.
So your view would be, if by making job creation the #1 priority, the government went out tomorrow and hired
a whole bunch of people,
500,000 people, that would not be a good thing in your view?
That would be a problem. And they've been growing like stink anyway, and we see what the result is, which is a very indebted, that's the technical term.
Just going to write that down.
Yeah,
growing like stink is a technical business term. Okay,
it's an economist term, actually.
Got it. Jim, what do you say on that?
Well, I take the same data that Catherine just mentioned and present it in a non-sarcastic way. The single sector that's created the most new work since the trough of the recession in Ontario has been the healthcare sector, 80,000 net new jobs. Now, is that really a sucking drain on the wealth created in the private sector? That's absolute nonsense. Most Ontarians need that system on a month-to-month, year-to-year basis. It produces high-value services that contribute to our standard of living and jobs that go with it. Now, Catherine's quite right. You can't solve the unemployment problem solely by putting everyone on the government payroll. There's many other things that have to be done to stimulate investment and employment in the private and nonprofit sectors. But surely the government's operations itself are part of either the solution or part of the problem. And that's where I'm concerned with this kind of single-minded focus on austerity that we're hearing at all levels of government, federal, provincial, and municipal, where the assumption seems to be, if we don't slash and burn, if we don't substantially reduce government spending, as Catherine has suggested, then we're somehow going to become Greece. In fact, that will make us more like Greece, because a big part of Greece's problem is precisely that they have cut back public programs, cut back public sector employment so badly that the economy is tanking, and that's made things worse. So they have to make job creation a central priority.
Do you want to hear the government of Ontario, Craig, come out and say job creation, come hell or high water, is our #1 priority?
Well, history would tell us that when governments make job creation their sole objective, irrespective of any other objective, it actually tends to turn out quite badly. At the end of the day,
Give me an example of that. What do you mean?
In the opening clip, there was a suggestion that there was a trade-off between productivity and job creation. In actual fact, the two go together. And the biggest challenge we have in the country is Canada's abysmal productivity performance. And ultimately, what government needs to do is set in place the right sort of policies to create the most innovative, competitive economy possible, because that sustains the long-term strength of job creation. When you're going through a period of fiscal austerity, and governments in Canada are going to have to, you are going to probably have slower economic growth, which will impact the trend rate of growth in your employment. But at the end of the day, putting in place a healthy fiscal framework, keeping inflation low and stable, creating a competitive tax regime, investing in education, these are all things that are designed to boost productivity and innovation in the long haul. And actually, that's where you get job creation, both in terms of the private sector and the public sector, because ultimately the job creation has to be sustainable.
I do want to do one quick follow-up, though, on something you just said, which was every time in the past, governments have said, come hell or high water, job creation is our #1 priority. You've said the effect is in fact the opposite.
So if you look at the Roger Martin Task Force on Competitiveness and Prosperity, they did a deep dive and they looked at a variety of different instances where governments around the world were basically looking at job creation. And at the end of the day, what they found was that over the long haul, it didn't create net new job creation over the long haul. The other thing they noticed was that when governments provide enormous subsidies to get jobs created, the price tags with those subsidies are so high. You know, the example that they used in the recent report, in the 10th report, was that, you know, on average, those jobs, the subsidy governments have to provide to create the job is about $75,000 per job. So in other words, at the end of the day, what we need is the most productive, efficient economy possible to create jobs for the long term, to create a rising standard of living. The problem that governments have is communication. And when they say, you know, we want to focus on productivity, people think that means working more hours, having fewer employees to produce things. At the end of the day, actually, productivity means a higher standard of living. And that's a messaging problem. So I think that's when governments resort to, we're focused on jobs. I think jobs is what you get out of an agenda aimed at productivity and innovation.
Let me take that part of what you just said there to Andrew, which is, if you are arguing, Andrew, that by bailing out the car companies, the governments preserve jobs, but as Craig would suggest, maybe at the cost of 6 figures per job, is that the kind of job creation priority we want to see governments tackling?
Well, first off, I think we have to look at unemployment is actually even a greater priority than job creation. We right now in Ontario have 7.8% unemployment in 2011. It used to be 5.7% back in 2000. Our goal should be get back to that level of unemployment. Now, if we need to create jobs to do that, that's important too. First off, governments, it's very difficult for government to say, I'm going to create jobs. They have certain levers, and certain of those can be effective. I think in the case of the auto pact, the auto agreement, that was absolutely essential. If we hadn't had that type of agreement, we probably would have lost most of the auto sector in the economy. But in other areas, it's much more tricky to say whether government should really intervene to develop policies to create jobs. Sometimes it will work, and sometimes it doesn't. It's hard a priori to say it's definitely going to work or definitely going to not work, but it definitely should be looked at. And in certain instances, I really think government is needed to develop a strategic policy to create jobs. Not in all, but in certain. So we have to be very careful about where we go, but we should be investigating as many possibilities as possible in that area.
Okay, Charlotte, let's do the follow-up here. If you, as you have said, if you think job creation should be the chief priority of the government of Ontario, and you said both governments actually, federally as well, Catherine has said going out tomorrow and hiring another 1 million people is not a good idea. That won't help you in the long run. So what's the first fiscal decision you take if you're trying to improve the bottom line here?
Well, let's start by saying that the way in which Catherine and Craig have framed the debate is that there's only one way in which governments can intervene, and that's the first mistake that they're making, because in fact, yes, there is a very important role, as Jim has said, about the public sector in terms of employment, and they do provide very valuable services that Canadians need, but also Canadians want and expect of their governments. But there are other ways in which governments can foster job growth and employment creation in the private sector. But those are things that, in fact, governments, and it's not through tax cuts, because we know that that, in fact, is a low priority for large corporations. That sure, they'll take them if they're offered them, but that's not the first step. So to pose the debate as though it's either or is actually a mistake on both of their parts, because in fact I think if we look around the world, what we're finding is that governments are making decisions around encouraging research and development. That would absolutely play into the growth in productivity and innovation, but unfortunately, Canada's federal policies on research and development have been a disaster. There's a need for renovation of those. There's a need for looking at how we might use procurement policy. If we look at the energy sector in Ontario, and no, it's not been public sector jobs that were created. It's fostered a lot of growth and innovation in the private sector by looking at their green energy.
Well, let me pluck tax cuts out there and go to Catherine on that, because she said your members are going to take them if offered, and I'm sure they would. But if you're going to make a list of priorities, here's how you create jobs, where are tax cuts on that list?
Well, it depends on the time, it depends on the tax. Income tax is a whole different tax than a payroll tax, for example. Payroll taxes like EI, Employers' Health Tax in Ontario, CPP federally, and so on, they are paid in good times and in bad. And they are actually a more pernicious tax than income tax. At least you have to be making money to pay income tax. So again, it's not as simplistic as, you know, as that kind of situation.
Your preference would be to load up
taxes are, obviously taxes are a factor. Of course they are. Things like being able to find the right people with the right skill sets are a factor. Things like geographic access to resources may be for some businesses. But unfortunately, what we have seen in Ontario, to a large extent, and not exclusive of other provinces, but that's where we're focusing now, is an awful lot of policies that, in terms of the small, medium-sized business community anyway, have been profoundly unhelpful. Red tape program after red tape. Look at this new program that came in the beginning of this year, supposedly to accommodate people who have disabilities, which, I mean, nobody would disagree with that.
Which program?
But basically, it's an act to accommodate people with disabilities. Anyway, what it does is every employer is required to offer a course to their employee. This is common sense. Do we need the government to tell us how to accommodate a customer that wants to buy a good or service from us? It's simply interference for more interference. It's not going to result in anything tangible, but we're going to set up a bureaucracy to administer it. We're going to, you know, it goes back to eco fees, goes back to higher, I mean, the green energy thing. There's absolutely, those jobs would not exist if they weren't being so heavily subsidized. And the cranking up of hydro rates has made the rest of the business community horrifically uncompetitive as a result.
Let me take that to Jim Stanford. Would we, if job creation is the #1 priority of government, should we, I don't know, deregulate or underregulate or regulate less?
Deregulate. It's smart regulate, because we need some regulations, obviously.
Should we have many fewer regulations in place, which would thereby allow her to spend less of her money on following regulations and more of her money presumably on hiring people?
There's an interesting feature about the current recovery, which has been very inadequate. That's why we're here 2.5 years into an economic recovery, still talking about the need for job creation. And that is that our recovery so far has been very dependent on debt finance spending by two sectors, by governments, as we know they've had deficits to keep their programs going during the downturn, and by consumers. We know that consumers have taken on more debt than ever in order to finance home purchases and other purchases stimulated by low interest rates. The part of the recovery that has not kicked into gear at all has been the business sector. Business capital spending, for example, in Canada is still lower than it was in 2008 before the recession hit. It's the only part of our domestic economy that hasn't got back to where it was. And we have tried, obviously, with tax policies, corporate taxes and capital taxes have been cut dramatically. With deregulation, I mean, you know, business will still complain about the regulations they have, but our economy is far less regulated and more subject to the forces of competition in all kinds of sectors than it has ever been.
Okay, but let's speak to the question here, Jim, which is, you know, if we cut let's say we cut regulations by half, would that enable business to hire more people?
That's what I'm saying. The point is that the business community's failure to come to the table. They are actually hoarding cash. Profit rates have been high, but they're not reinvesting it. They're accumulating cash and deleveraging, paying off debt themselves. That failure to come to the table is the reason why we're here tonight, talking about unemployment. And if we want business to do more, and it has to do more, it can't just be laying out more of a red carpet or making the environment still more amenable. We got to give them a bit of a kick in the pants, is my judgment.
Craig, if we cut the regulations in half, would you hire more people?
I think small and medium-sized businesses would say that regulations are one of the deterrents that they have. I think that large corporations probably have much better capability in dealing with the regulatory environment because they have the resources to do so. Obviously, regulation comes with a financial cost, and every dollar that's going into paying for regulation is money that isn't being spent on investment or hiring. So obviously, regulation does have an impact. But to go to Jim's point about the business sector not playing their part, we need to understand the economic environment we've been in. I actually think governments have done a remarkably good job of doing many of the things that we've asked them to do in terms of creating the right environment to induce businesses to invest and to hire. And I think ultimately it is going to pay off. I think the problem we've had is that we had a financial crisis in 2008, 2009 that was followed by a half-speed recovery in the United States, a globally risk-filled environment, which has created an outlook that's so opaque that businesses have been, quite frankly, fearful to invest because they don't truly know what's going to happen. You know, about 4 months ago, people were assigning a 40 or 50% probability to a renewed contraction in the U.S. economy. Up until December, we hadn't seen a single sign that Europe was going to be able to constrain their fiscal crisis. And this naturally leads to, you know, on an individual business by business level, business leaders looking at the outlook and saying, gee, I don't know what's going to happen. I don't know what I should be doing with my payrolls. I don't know what I should be doing from investment. So let me adopt a wait and see approach. And of course, the problem is when all of them do it at the same time, you actually end up in a weak economic environment.
It's kind of a collective irrationality that's a fundamental feature of a market economy. Everyone's worried about the future, so every business cuts back its spending, and when they do that, they create the future that everyone was afraid of.
But it's different now because the environment we've been in, we've never had a balance sheet style U.S. financial crisis since the Great Depression. This is not a normal economic environment for businesses to be operating in.
But that's why governments need to take extraordinary measures, that in fact you can't fall back to the same old answers that were trotted out in the 1980s and 90s. This is quite a different period, and so as a result, governments need to look at new innovative types of policies, which include, for example, for small businesses, many of the ones in the manufacturing sector, their biggest problem is they can't get access to capital. They want to grow. Banks won't loan to them. They can't get access to venture.
No, actually,
certainly
banks
in
have more
manufacturing.
Money. No, it's not true
and
at all.
those who are in the innovation, research and development side are not willing to.
She's in business, you're in academia.
Well, I look at the stats, and the stats are
we poll our members who are real live business people every day, all the time, and I can tell you they don't want the capital right now. And they are hiring, by the way. I mean, if you look at the gross economic data, Ontario has a problem. In Canada, though, we have gone to pre-recession levels in terms of employment and so on. The jobs have moved elsewhere. Absolutely, they've moved west for all the reasons we know. But we have created jobs, and our members are creating jobs, and they're roughly half the private sector economy.
But you wouldn't deny, you guys, I shouldn't say you guys, but I mean, many businesses today are sitting on pools of cash and they're not spending because they're uncertain about the future.
That is probably true in the larger corporate world. There may be a handful of them in the smaller situation as well, but there is a ton of uncertainty. And you know, the notion of forcing a business to create a job that then or 10 or whatever that then end up a year later they have to get rid of that job. And all of the regulation we've loaded on firms, and this is a really important point. They're finding it out in Europe right now. There is so much related to. It's very easy to hire somebody. It is so tough. to get rid of them when your business can't sustain it anymore. So they prevent, if you loosened up on some of those red tape heavy regulatory.
Trying to get them to hire disabled people, because in fact the record of business in hiring disabled, in fact historically hiring women on an equal basis, has been absolutely abysmal.
No, it
so
hasn't.
in that sense,
no, I don't know where you're getting your data.
The only reason why,
maybe Afghanistan or something, but not
no,
Canada.
no,
Let's
come,
not
you know,
get
Catherine, I'm sorry, you clearly don't read widely enough to know that the unemployment rates amongst disabled people are so high. They're in fact rates of poverty are out of
Not
this
women.
world.
I was commenting on women.
Well,
Just
but
for the
also,
record.
I mean, even women, there is clearly a glass ceiling, and the only reason why, in many cases, women were pushed and this into various sectors is because we had early levels of pay employment regulation, employment equity. Those kind of regulatory interventions are absolutely critical to get hiring of certain groups. Now, having said that, over the long term, employers then do adjust their behavior, but they don't do it just willy-nilly. They do it often
Lots of
because
employers are women right now.
Okay,
So, you know,
let
really.
me get Andrew. I haven't heard from Andrew in a bit. Andrew, why don't you come on in your...
Well, certainly, on the regulation issue, overall, I don't really think it's a big factor at all in terms of employment. Now, you can find examples, say, in Aboriginal land claims can affect natural resource development, so that might be a factor there. But overall, all the studies I've seen in Canada, it's really not a barrier to employment growth at all. And of course, it's also important that we talk about losing jobs in Ontario, but as was been pointed out, we've actually been seeing job creation in recent years. For example, since 2000 in Ontario, there's been over 100,000 jobs created in professional services, in finance and real estate, in public administration, in health, in education, in all those areas. So we are actually, and those jobs actually aren't that bad in terms of quality. So the loss of manufacturing jobs hasn't really been that negative effect on the overall job quality. There are a lot of problems with job quality, but it hasn't been because of the loss of jobs in manufacturing.
Correct.
So overall, I think it's basically, a main problem is basically just lack of aggregate demand. And as Jim pointed out earlier, if we do have, we're going towards a balanced budget by, say, 2017-18, well, that will have a negative effect on aggregate demand. So there's going to be negative effects on the overall macroeconomy from the recommendations of the Drummond Commission. Now, maybe we want to do that, but there is a price to pay. I think it might be better to say, well, maybe we should try to balance the budget by 2020 as opposed to 2017. And the key thing there is making the debt to GDP ratio fall, and that's going to happen a lot sooner than we don't even need to get to a balanced budget for that to happen. So I think it's really a demand issue. That's really the problem for Ontario, and the key is to get stronger demand growth so we have more jobs.
Craig Alexander.
Well, I still think there's an issue here around productivity and job creation, because we actually saw what I would characterize as a job-filled economic recovery up until the middle of last year, where job growth in Canada stalled. And in fact, one of the amazing things was while the economy was sort of growing at about 2 to 2.5% since mid-2009, we actually had much stronger job growth than you would have expected in that period. And economists like myself were scratching our head, because what we were seeing was businesses hiring, businesses and government, public sector hiring, but we were seeing absolutely no productivity growth. In fact, every additional widget we were producing was we were basically adding somebody to the payrolls. And you know, it wasn't a sustainable rate. Now we've gone through 6 months where effectively there's been net no job creation. And I actually think it's largely payback for the fact that the pace of job growth that we were having in the prior 18 months was too strong. And what we'll probably see is job creation will start to pick back up again over the coming months, but it's not going to be booming, because at the end of the day, we're going to have relatively gradual economic growth. The other story, though, is below the surface is the sectoral story. And certainly, you know, this has been a job recovery that's been driven by services, including healthcare, education, government. And those, you know, those are, in many cases, those are high-paying, good-quality jobs. There's nothing wrong with them. The only problem is that governments in Canada now have to rebalance their fiscal situation because the deficits that are currently in place aren't sustainable. And that means you have to go through an adjustment.
Charlotte, let me pick up on the first question I asked at the beginning of all this, which is it obvious to everybody here that job creation is the #1 priority for the government of Ontario? And, you know, that's what they say. However, your old friend Don Drummond has been all over the news over the last few weeks because he's given us a path to getting back to a balanced budget. And if you listen to the Premier nowadays, it sounds like reducing the deficit to 0 by 2017-18 is the top priority of the government of Ontario. If that's true, are you okay with that?
I think that it's short-sighted, and I would have to pick up on what Andrew was saying. I think to accelerate the timeline on paying down that deficit without looking at what the balance, what the impact of that will be on the economy, on the unemployed, on young people, is just not a good set of strategic choices.
So if it took 3 or 4 or 5 more years to balance the books, that's okay.
Absolutely, because in fact you do. I agree with you, Craig, that we do need to see increases in productivity. We do need to make sure that there is a solid foundation of the economy. The question is how you achieve that. You won't achieve it by accelerating the pay down on the deficit and on the debt if you don't in fact take care of the other economic factors. And that is also in the Drummond Report. The Drummond Report suggests that we need to think of new ways of sustaining parts of the economy, including the manufacturing sector, the biggest sector that's been hit, and it's like the undiscussed part of this, of the debate so far is the collapse of the manufacturing sector and what that means for Ontario. That is the engine of Ontario's growth, and it's the engine of good jobs. And in fact, you have companies like Caterpillar who come in, invest, and then close down and take with them not just any old jobs, but good jobs, but also highly skilled jobs. It was a firm that had a high technological capability and various engineering kind of capabilities, which Canada needed in terms of public transport.
And took our tax subsidies to boot.
Exactly.
Yeah.
So you think, what was the lesson that we learned from that? And there should be several that we learned from that.
Well, before we pick up on that, on this issue of what's a bigger priority for you, creating more jobs or balancing the budget, where are you on that?
Well, they're very interconnected. The notion that, I mean, unfortunately, McGuinty has almost doubled our debt in this province, and to think that we're just going to be able to write that off clearly isn't true. So it's a matter of feasibility. And even though, I mean, it's true, if government retrenches, and you look at the extreme examples of the Greases and the California, you know, there's a lot of people in a lot of governments in massive debt around the world, and thankfully we're not the worst, but I don't think we should aim to get there either. But, you know, you have to do both. I think the thing is you have to do both. And the thing I worry about in saying, oh, let's let it go on another 5 years, we're going to have a recession in there in all likelihood.
Another one?
Well, I mean, I'm just saying that's the law of averages. And so the notion that we're going to be able to systematically not get into the soup again is probably not very realistic looking at history. We also haven't mentioned things like the value of our dollar. One of the big things that's killed manufacturing in Ontario is the value of our dollar. And it's been driven up largely by our resource wealth, which doesn't happen to reside in Ontario. So we can't do anything about that, really, technically, to lower the value of that dollar. So unless we have something precipitous happen with the price of resources, which doesn't look like it's on the horizon, we're going to continue to have a pretty high dollar relative to the U.S. in particular. And so we're going to have to find another way to get those jobs back, which worked when we had a dollar that was 70 to 80 cents, not at parity or even higher than the U.S. dollar.
If we have another recession coming, as Catherine has, I don't know about
forecast.
Well,
I'm saying in the next decade or so, you know.
The last one
well,
yet.
I was going to say, we haven't finished the last one yet. We're still trying to, you know, dig our way out of the deficit that's been created to deal with the last recession. So where are you on that issue of what's the bigger priority? Creating jobs come hell or high water right now, or getting this budget in balance before the next recession comes?
Well, in a way, the answer is both, because it wasn't McGuinty that doubled our debt in Ontario, obviously. It was the fact that we experienced this wicked financial crisis and an unprecedented recession, the worst by some measure since the 30s. That's what created the deficit. And if you were to get Ontario back to something close to the employment levels we had before the crisis hit, the deficit would frankly take care of itself. I've looked at some number crunching where the level of GDP in Ontario, where it would be today if we hadn't had the recession, we got caught back to trend, as well as the level of provincial revenues as a share of GDP, if it got back to where it was, you'd get $15 billion in additional provincial revenue from that, which not coincidentally is about the size of our deficit. Remember, the budget was balanced provincially before the recession hit, so putting people back to work is, I think, the best way to solve the deficit, but you won't do that through single-minded austerity.
So you would be prepared to go into deeper public debt in order to knock the unemployment rate down a couple of points?
Well, I'm not convinced that it would even require deeper public debt if, in fact, the strategy to put people back to work, and it would have to be a multifaceted strategy. I said at the beginning, obviously you can't just put everyone on the government payroll. You're going to have investment and industrial strategies in manufacturing and tourism and other sectors that you want to create jobs in. You're going to have to find a way to finance long-run infrastructure investments and keep the jobs coming in those. So you need the whole gamut. But if you did it well, I don't see why you couldn't put Ontarians back to work and still meet those targets by 2017, 2018.
Let me get Andrew to weigh in on this first, and then we'll go around on this. The Government of Ontario, Government of Canada as well, have a lot of tax incentives out there. They've lowered corporate tax rates and so on in order to get corporations to hire people, do all of the things that they do to keep our economy humming, etc. Do you think we are getting, for the incentives we offer, adequate jobs and adequate revenues? Andrew.
No, I don't think we have. We've seen very large declines in the marginal tax rate, yet again, corporations haven't taken that up. And it's a good idea, I think, in general, to reduce taxes on business, but if it hasn't happened, well, maybe it's because of the uncertainty. That might be a key factor. Also, in terms of the R&D tax credits, we have very generous R&D tax credits in this country. And we really haven't seen the pickup in terms of the overall business sector R&D. Now, I think there's going to be a shift towards more, away from the tax credits, more towards more discretionary expenditure by government on R&D, and that will probably be a good thing, and hopefully that will have some positive effect on R&D. But I don't think we've been getting great value from our incentives for business. Now, maybe it's because of this uncertainty, as Craig said, but we've got to do better than that in the future.
Craig, how about it?
I think the drop in the corporate tax rates and the elimination of capital taxes, harmonization of sales tax in Ontario has been all very positive. Quite frankly, I don't think we're getting a good bang for our buck for most of the other tax expenditures that are out there. Quite frankly, an awful lot of them were put in place when the corporate tax rate in Ontario was much higher than it is today. So I do think a good review of those programs is called for to evaluate which ones we're actually getting benefit from. And I suspect when we do the cost-benefit analysis, an awful lot of those tax expenditures can be gotten rid of.
We offer a harmonized sales tax in Ontario right now. They've got the corporate rate down to what? Is it 25% now? Federal and provincial combined?
If next year.
26?
It's supposedly
if it goes down to 25.
Yeah, that's right.
But it won't now, will it?
Well, I don't think it will now. Not with the minority and not with noises we've been hearing lately.
But in any event, for all of the incentives that we do offer so that your members will create jobs and pay lots of taxes to keep our healthcare system and schools going, do we get an adequate return given what we offer?
Well, I think I don't disagree with what Craig just said. We had a bunch of these sort of little specific things for sectors or whatever when we had a general corporate income tax rate that was much, much higher. And those things usually don't tend to help a whole heck of a lot. And I think we should look at streamlining the tax system because often the complexity is worse or at least as bad as the taxes themselves. So I do think we do. But to simplistically say, okay, we lowered tax, therefore companies ignore all these other factors out there in the world, the weak U.S., the unstable Europe, the weak U.S. economy, the unstable Europe, our relatively high dollar. Unfortunately, you have to take those into account too. So it's not as simple as just saying, okay, taxes have gone down, and that's corporate income tax, by the way. I mentioned payroll taxes earlier. EI's gone up. Minimum wage in Ontario just kept cranking up right through a recession, and that hits the small business community very hard. No, but it's an increased cost. It's a very significant increased cost.
Increased money in people's pockets.
Well, it is, but you have to make the money in the first place to put it into people's pockets. So that's the challenge there. A heavier regulatory burden, such as a lot of the different things we've seen, squandered government money, whether it's on green energy, which just cranks up everybody's hydro rates and on. Taxes aren't as simple as taxes aren't the only simple answer that then will translate into X number of jobs. You've got a lot of factors, and unfortunately, the uncertainty, as Craig was mentioning, is horrendous right now out there.
Charlie, you were saying?
Well, Catherine would have us believe that the problem is regulating business so they have to hire the disabled, increasing minimum wages because, so in other words, it's fine for those at the head of corporations to make ever more higher salaries, greater profit sharing. I mean, we can look at all kinds of examples across Ontario. And in the banking sector, where the kind of salaries of the top people are absolutely exploding relative to those at the bottom, real incomes are declining. So in that sense, to suggest that regulations that are intended to in fact ameliorate and in fact address the issue of poverty, which if there is one big reason that's a drag on the Canadian economy, it's growing rates of poverty. Growing rates of poverty drive up use of public services, dependence on various forms of government support, which most of those people would rather in fact have a good job, but they can't in fact get a good job.
But well, I should ask, can you force a private company to hire somebody?
No, but the point is you can create an environment where in fact they have some sense of corporate social responsibility. I mean, if you look at that's not the logical consequence of what I'm saying, Steve, I wouldn't argue. Well, it's not that you can force companies to hire, but what you can't say is, you can in fact say, maybe we're not going to allow income splitting at a federal level, which will contribute to the federal deficit, but you allow income splitting so that those at the very, very top get even further tax breaks and have more disposable income at the same time as complaining that minimum wages are going up. So in that sense, I think
your people don't make like massive
our people
salaries,
make
right?
less. No. I mean, that's a large corporate reality, right. And it's not even a reality in a lot of large corporations. No, but for small business, no. I mean,
you're not
you've
part
got,
of the 1%.
You've got people. No, hardly. You've got the average.
So then the income inequality issue should be a significant thing for your people, should it not?
Oh, it is. It absolutely is. And when you've got the average small business is probably 5 to 10 employees. That owner knows all of the people he or she is working with. They're probably friends or family, and so the notion they don't have social responsibility is ludicrous. It has been shown time and time again in the facts that they don't let people go in a recession.
In which case they
hang on to them
by a higher minimum wage, because if they have a sense of social responsibility,
there is a bottom line.
They should in fact want to pay people a living wage.
A restaurateur member of mine actually said,
is not a living wage.
A restaurateur of mine made a very good point. He said, I don't care if I'm paying my busboy or whatever another X cents per hour, but then my chef who makes 90 grand a year, he wants the commensurate increase. And it's not minimum wage per se, it's what it does to the entire wage structure. And that's the reality of a business.
Okay, let me go to a policy that the NDP floated in the last Ontario election, since we're talking about how to create jobs here. And their view was, Jim, I'll get you first on this. Their view was, if you want a tax break and you're a business, you got to hire somebody. You don't just get a decrease in corporate taxes willy-nilly with nothing to show for it. You want the break, you got to hire somebody. Can you put those kinds of strings on that kind of offer?
Oh, sure you can. In fact, it's kind of a conceptual difference. The way that we have tried to support the private sector in Canada and in Ontario has been to cut taxes across the board and make the general environment as amenable to business and sort of profit-friendly as possible. Another approach would be to actually use fiscal policy, use tax levers as a way of changing the behavior of companies directly. In the area of investment, it would be the difference between a cut in the corporate tax rate, which you get whether you invest or not, and an investment tax credit, which is paid out to companies only when they do invest. Similar would be the policy that you mentioned, which would be a tax credit tied to bringing in new people, either some kind of relief on the payroll deductions that Catherine has been mentioning, or some other kind of credit delivered. Yeah. That way, you're actually incrementally changing business behavior. If you want to get the benefit, you have to demonstrate some kind of contribution to the economy. I think it's a more effective approach.
Let me get Craig on this. Rather than just cutting general corporate taxes across the board, you'd have to do something to earn that tax break. That's the position. Good idea or not?
I have a problem with identifying it in terms of you can have this tax break if you hire X number of people. And the reason is that if you have a lower tax rate, it can encourage businesses to invest in new machinery and equipment. That can make them more competitive. It can make them more profitable. It can lead to job creation. But in actual fact, if you're telling businesses, you know, we'll give you a lower tax rate if all you do is hire a person, and they go through the math and say, okay, well, we'll hire this person, but we won't actually have them do anything, because actually the only reason we hired them was so that we could get the tax break. You're going to have a lot of, you know, workers that aren't actually contributing to the overall economy, and actually you're going to end up with a worse outcome. Productivity will be lower, the size of the income pie being divided between workers and businesses will be lower. So quite frankly, the best thing that governments can do is set up the right sort of broad stroke policy environment to encourage competition, to encourage job creation, to encourage productivity.
Jim, what's your view on that?
So doing direct ties, I don't think it would work.
Sounds like Craig's saying it's too micromanaging. You're getting into our business too much here.
Micromanaging, isn't it? If I put an investment tax credit that says, you know, you'll get 10% or 20% of whatever capital you actually put up, you're not picking winners. You're not saying this company gets it and that company doesn't. You're rewarding a certain behavior. The rollout the red carpet approach has not delivered. There's virtually no visible payoff at all to the reduction in general corporate income taxes.
But you don't know that because you don't know what the counterfactual was. If you said, okay, if we hadn't had the decline in corporate tax rates, the question is how much weaker would the economy have been? How many more jobs would have been lost? How much weaker would investment have been? You know, what you're looking at is what actually happened and saying, we didn't like the outcome because it wasn't strong enough for us. Well, you know what? as we've discussed, there was a lot of external factors also at work,
creating
a very weak economy.
The advocates of the business tax cuts presented exactly that simplistic case. Go back and look at the presentations that the federal government made, that the provincial government made when they were advocating reductions in across-the-board taxes. They had hard job numbers. These are the jobs that will be created. This is the new capital that will be invested, and it hasn't come to pass.
So long as nothing else changed.
Well,
and of course everything else did.
Let me get Andrew in here as well. Andrew, your view on this debate?
Well, I guess I agree with both of them in a sense. First off, I think the concept of incrementality is really important. You want to affect behavior. So if you have a program, for example, on R&D, you'd only get a credit for R&D above a benchmark level, what you did last year, for example. On the employment creation, I think there you can tie it to, say, you get a cut in your payroll taxes if you hire additional workers. So again, it's incremental. So I think you can design a good policy in that area, but it takes a lot of work. It's not necessarily as simple as Jim pointed out, but on the other hand, I don't think it's as bad as Craig pointed out. So I come down the middle on that one.
Okay, let's look at, I actually want to look in your world right now, because we're told frequently that small businesses are the engines of the economy, and they're the place, they're like the canary in the coal mine, right? When the economy goes down, you guys are going to feel it first, and potentially when the economy comes back, you guys are also going to, because you're, leaning close to the ground and all of that. I want to know how true that really is, that the small business sector really is the place where once the economy picks up, you'll create the jobs first.
Well, it is likely. Because they tend to happen in ones and twos instead of maybe 100 or 1,000, and of course the reverse goes for destroying jobs, if you will. There is definitely some truth to that, but I think the most important thing is small business really is more of a stabilizer in the economy. They don't tend to go up as sharply when things ramp up in the economy, nor do they, they don't have a cataclysmic fall. Like the last recession, we looked at the data, there was very little job loss in the small, medium-sized business community. So really, through economic cycles, it can act as a real stabilizer. And that, obviously, that's a good thing. If you have wild swings, they're much tougher to deal with than a more, more gentle situation. But I think the complexity here, and you get back to the tax incenting a job. We've seen time and time again with government programs, unfortunately, people, if they want to access that, they end up saying, okay, I'm going to set my business strategy up to take advantage of a tax instead of taking advantage of opportunities in the industry. So they tend to be short-lived, or they create bricklands, or they create things which was made to conform to a policy, not to conform to good business decisions.
But politicians feel they have to, Andrew, if that's for us, you just take a message, okay? If governments feel, because they're elected, they feel they got to do something.
Oh yes, absolutely.
So, but you prefer, you think it's actually better for the economy if they do nothing?
Well, I'm not saying do nothing. No, of course not do nothing. I mean, we have a big government sector in our economy, so they're obviously doing a lot of stuff. They should do it as efficiently as they can, so use those tax dollars as efficiently as they possibly can, and put in place policies. I mean, the problem small business has dealing with a lot of government policies is just understanding them. You can imagine the time-starved small business person with 3 or 4 employees, they tend to spend their Sundays doing the red tape. That is not productive for our economy.
So as we look around to find out who's actually going to start creating the jobs of the future, Craig, should we be relying on the banks, for example, who have tens, if not hundreds of thousands of employees, or her corner store operators, or the university sector? Who's going to lead us out?
How about not just corner store, though? Because, RIM was a member of ours when they had 4 employees.
Okay.
So we actually represent
small and medium-sized businesses are statistically the job creation engine of the economy. If you actually look at where the bulk of the net job creation comes from over time, it's from startups of businesses and then the growth of those businesses. Now, in terms of overall employment, large corporations are huge employers, as is the public sector. So, but if we look at it in terms of, on a net basis, where does the bulk of the job creation actually come from? I think the stat is something about like 2/3 of net job creation actually comes from SMEs, so small and medium-sized enterprises. So, we know that. At the end of the day, I think that we went through a recession. During the recession, governments had to provide stimulus to mitigate how deep the recession became and to help the economy get out of recession. That's led to large deficits. We've ended up in an environment where public sector growth has been too strong for some time, so we need to have an adjustment process. We can certainly debate about the exact time frame as to what is the right number of years, but ultimately I do think that we're going to have to see a rotation. The public sector can't be the job engine going forward. The private sector has to be the job creation engine.
Does the Premier know that?
I think that Jim's right.
Does the Premier know that, Craig?
I hope he knows it.
Does he get it? Do you think he gets that?
You know, I think that the message has been heard loud and clear in Queen's Park that they have to balance their books over a reasonable time frame. One of the things that hasn't come up is the fact that the credit rating agency, Moody's, has the government on negative watch. And the reason I'm concerned about that is that if the government doesn't lay out what is deemed to be a credible fiscal program, ultimately, if they get a debt downgrade, we'll have higher interest rates in Ontario. That means a bigger share of tax revenues will be going to pay the debt rather than pay for healthcare, pay for education.
Yeah. And those ratings agencies were so good during the 2008 Great Recession. They were
absolutely,
they performed so admirably.
Yes.
I didn't make a judgment around whether they should have or they shouldn't.
But the fact is they do. Yes. I got less than 2 minutes here. Tell me, hang on, Judy. I got less than 2 minutes here. Can you tell me whether it looks to you as if the province has given up on manufacturing?
No, I don't think they have. And
in
fact, I think they would be foolish to do so, because for many of those businesses and those jobs created in the SMEs are in fact dependent upon manufacturing. If you look at the automotive industry as an example, the large corporations, yes, the big assemblers, but out of that, all of the auto parts suppliers, all of the fabricators, a lot of the innovators around small parts, they're small businesses. And as a result, those small businesses are dependent on often the vibrancy of those other sectors. So in that sense, I think, no, it hasn't, but it doesn't have the answer, and it needs to figure that out.
Got to give the last 30 seconds here to the CAW rep, because do we look like we've given up on manufacturing?
No, it doesn't. No, the government is trying, clearly, and other stakeholders. We can't give up on manufacturing. There's other engines of our economy in the tradable sector as well, tourism, tradable services. All of them have been hammered by the value of the dollar, but that's not a provincial responsibility. So we will need to think hard about what are the out-of-the-box ways we can have to support our manufacturing and other tradable industries.
Gotcha.
Like telephones.
Like phones. We're dying to know who's calling Andrew throughout the course of the program. Andrew Sharp, good to have you on the line there from the nation's capital. Thanks for being there for us on Skype. Here in the studio, Catherine Swift from the CFIB. Catherine, thanks for being here. Charlotte Yates from McMaster University, and Craig Alexander from the TD Bank Financial Group. Jim Stanford, the economist from the Canadian Auto Workers. Thanks so much, everybody, for a mostly very civilized discussion.
Support Ontario's public television. Donate at tvo.org.